Hello everybody, I'll be going over SMT, also known as Smart Money Technique Divergence, in today's video, and what it means, what it looks like, and what happens when we get an SMT. An SMT is basically, so you've already learned liquidity sweeps. If you have not, you need to go back and see that video. But liquidity sweeps, you know what they are, when price takes out a high and then price reverses. For smart money techniques or SMTs, I'm just gonna call them SMTs. You're not gonna. You never anticipate if price is gonna reverse, but SMTs are basically just a stronger, a stronger way to tell you price is probably gonna reverse right here. So what do we see? This is both of these candles that are the line starts at is both at 12:45. But what is the difference at the one at 2:16 p.m.? Price takes out this high right here on NASDAQ, on NQ. And on ES, what does price do with this high? Price doesn't take it out. What does that tell us? ES isn't going to make it that far higher. ES doesn't have enough speed or enough strength to move up higher. But what does NQ do? I'm going to take this high out, grab the stop losses that are up on this high, and there's a difference. So it means it's just a higher chance at a reversal like we see right here. And I can actually show you a setup right now off of my mechanical model as well. But understand that SMT is a difference. A divergence is a difference in the highs and the lows. And I'll tell you how it works. When there's an SMT on highs, it's going to be bearish. When there's an SMT on lows, it's going to be bullish. It's not if ES took this high out and then it's going to be bearish or bullish. It's going to be bearish, but it's not like, oh, SMT took that swing out. It's going to be bearish or bullish. And then, let's say, I know I'm using the same example, but I just didn't word it right there. Let's say ES has an SMT because price took out this high. But NQ didn't. So that's an SMT divergence. It's only going to be bearish. It doesn't depend on which asset or index or currency took it out or not. It's going to be bearish if it's on the highs. If it's on the lows, it's going to be bullish. That's just how it is, simply. And I will tell you which ones that are popular right now. I know Omar trades Forex. I personally trade futures. For futures, you look at ES, so E-mini, S&P 500, and NASDAQ, and YM, which is Dow Jones. But personally, I don't really use YM that much. I just watch ES. But it's definitely helpful to have it on there. I probably should start doing that. For Forex, Omar trades the euro. You can use I'm pretty sure you can use the Great British Pound. There might be others, but I know the Great British Pound is also one. Is like the ES to NQ, which is the Great British Pound is the Great British Pound to euro. That's just how it is. Okay. Now, how can it be used in the markets? High probability reversal. You've heard me say that right near the beginning of the video. If you guys know what my mech model is, it's basically we probably should have but just remember, this is an SMT. We already drew it out. We can leave this now. We're on NASDAQ. Let's look on the 15-minute time frame, see if we have any PD arrays. This technically is an order block, but this is a bad example of my model, but it is an example, okay? It's gonna work. Let's see. Actually, should we use ES for this one? Yeah, I'm gonna use ES for this one. This one gives a cleaner setup because there's another SMT at these lows, if you can see that. Also, I know there's something with relative strength between these two, the like how related they are and how they move, and like how correlated they are and how stronger SMTs are, but I'm not gonna really keep a track on that. But here we have, what is it called? Consolidation, right? Right here. Price manipulates out. Take out that high on NQ, so that's an SMT. We close over that one right there. Close over these two fair value gaps. Inverse fair value gap right here. You could enter off the retest. I'm just going to make it simple. This isn't a necessarily great entry. It's a 1 to 3, so it still worked out. But there you go. Oh, PDI. If you guys don't know what a PDI is, I will make a video on that. And I don't know if you guys are going to see that one first, but if you guys don't know what it is, it will be in a PD array video or confirmation. But a PDI right here, well, this is actually a PD BPR. And guess what? Price came to retest it, push lower into these lows that we have. Although NQ, I would have definitely got mad if NQ didn't take out these lows, but still would have went to break even, so it really doesn't matter. Okay, so look, SMT, high probability reversal. What do we see? PD BPR, accumulation, manipulation, distribution, like in the AMD video that I put in the second lesson. We have that pretty good setup. We have lows that we see. Price moves super clean to those lows. And if you want another example of an SMT, we have one right here. Price takes out the low on ES. Guess what price doesn't do on NQ? Doesn't take out the low. See how this one is much higher than this low? This low is lower than this one. Means price took it out. Price didn't take it out on NQ. What happens after? Oh my gosh. Would you look at that? We actually have another, if you want to trade, if you want to start, this is a starter setup, okay, because this isn't really great because you don't really have any accumulation unless you want to say this is, which isn't super clean, but whatever, dude, you can do it if you want, but I'm not giving you any financial advice, and I'm not saying go in your charts because I told you to do this. No. Inverse right here, put your stop right there. What do we target? Highs right here. Get a 1 to 8. There. SMT. Inverse fair value gap. If you guys can't see it, right here. You guys could have literally entered off the retest and gotten a crazier RR, but I mean, I enter on close because when I trade my model, I want price to distribute to, take profit. So I hope it doesn't stay back here and consolidate. If it does, then I'm out. But SMT, AMD, if you want to even call it that, and PDI. Okay, there you go. That is SMT divergence for you. Price will. It's not like obviously nothing in the markets is 100%, but it usually does it. Like if you have a lot of PD arrays that tell you price is going to be bearish, it's probably one of the best confluences to use. SMTs are very good because you want a sweep of something. You want a turtle soup. You want a sweep of something. And also, if you guys don't see that, we actually have a turtle soup at both of these setups, which is pretty good. You always want a turtle soup. Turtle soup and SMT are clean. Turtle soup, SMT, inverse happens again at these lows. Wow, would you look at that? But only limit yourself to one trade per day because you're trying to save your money. And that's basically it. If you guys have any questions, ask me, because I know a lot of people get tripped up on SMTs, but I don't really see how, because throughout all the concepts I've learned, I think inverses and SMTs were the easiest one for me to grasp. But I mean, I'm not going to bully you for it and be like, oh, you're an idiot, you don't know what an SMT is, obviously. I mean, I didn't even know what liquidity was when I watched TGR's boot camp, and now when I look back at it, I'm like, wow, I was not very smart. But I mean, you got used to it over time. But I'm going to stop ranting, and I'm going to finish this video. See you guys later. I hope you guys have a nice day, and I hope you guys keep learning and watching these videos. See you guys later, guys.